What if I told you the calmest part of the financial world is now sending shockwaves across America, and it's happening faster than anyone expected? This week, stock markets worldwide have cooled down after a wave of chaos triggered by U.S. trade tariffs. But beneath the surface, something even bigger is brewing, inside the U.S. bond market, a place that almost never makes headlines. Now, bonds may sound boring, just government IOUs with a little bit of interest attached, but don't let that fool you. The sudden movement here is screaming one loud message: investors are losing confidence in the world's largest economy. And that's bad news for everyone. So what's going on with US bonds? Normally, when stocks are shaky, investors rush to government bonds for safety. But this time, they're running the other way. After President Trump's Liberation Day tariffs on April 2nd, stocks tumbled, and at first, bonds seemed like the safe haven. But just days later, as tariffs kicked in and Trump doubled down, investors started dumping US bonds at an alarming rate. The 10-year yield shot up from 3.9% to 4.5%. The 30-year yield spiked to almost 5%. In bond markets, even a 0.2% move is major. These jumps, they're practically earthquakes. Why did investors panic? Because when uncertainty rises, bonds lose their safe label. And when bonds aren't safe, borrowing money becomes much more expensive for the government and for regular Americans. How does this hit you, the average person? Higher bond yields mean the government must spend more on debt repayments, leaving less money for things like healthcare, education, or infrastructure. Worse, higher borrowing costs ripple out to mortgages, car loans, and credit cards, making life more expensive for families and small businesses. Small business owners, in particular, may struggle to access loans, halting growth and putting jobs at risk. Even first-time home buyers might feel the pinch, facing higher costs just to get a foot on the property ladder. And how did President Trump react? At first, he told America to hang tough, but the bond market's reaction was a game changer. Facing growing pressure from business leaders and economic advisors, especially Treasury Secretary Scott Bessent, Trump introduced a 90-day pause on the harsher tariffs except against China. It was a rare moment where Wall Street moved the White House. Is this similar to the UK's 2022 bond crisis? Some experts see striking parallels. When Liz Truss announced unfunded tax cuts in the UK, investors dumped British bonds, nearly collapsing the pension system. The Bank of England had to step in, and some fear the US Federal Reserve might have needed to do the same if the sell-off had continued. Even though bond yields have calmed slightly, the scars remain. An underlying risk premium, like a hidden tax, may now linger in US Treasuries, threatening long-term stability. And what about China? While China owns a massive amount of US bonds, second only to Japan, experts agree that a sell-off from China would hurt Beijing more than Washington. For now, that particular fire hasn't started, but the fuel is there. Don't forget to share your thoughts in the comments, whether you agree, disagree, or see it from another angle. Because in the end, no matter where you stand politically, it's the everyday American's quality of life that matters most. Stay curious, stay informed, and as always, keep watching and keep learning.